The crypto rally fizzles out as higher US Treasury yields and a stronger dollar start to weigh on markets. The halving event is keeping a bid to implied vol, despite crashing realized, making short vol trades look attractive. And Ethereum breaks support levels as protection buyers return, taking short-term skew back in favor of puts. All this and more in this week's Crypto Options Unplugged. Hey everyone, welcome back to Crypto Options Unplugged. I'm Imran Larker from Options Insight. As always, in the studio with me, it's Dave Raquel from FRNT. How's it going, man?
Yeah, good. Yeah, not bad. Nice long Easter weekend.
Yeah, we needed it.
Yeah.
Crypto's having a bit of a breather though, finally.
It is having a breather. Like I feel we're just kind of in a bit of a choppy range. Like I think we tried at one point last week to take the 71k level and fouled again, and now we've retraced again. So yeah, kind of a little bit of a patient game at the moment. We're just treading water a little bit.
Can't go up every week forever, can you?
No,
really?
it can't. And you know, the macro is certainly in terms of US yields and the dollars, again, is just starting to weigh again. We had a really strong or stronger ISM print yesterday, and particularly the prices paid element showed some worrying inflationary signs again. So we saw quite a big sell-off in bond markets, yields going higher, dollar stronger.
I was surprised at the reaction. I thought the Fed's already kind of signaled to us. We were talking about this last week, right?
Yeah.
The Fed signaled to us they're expecting PCE to kind of trade at higher, and then the market just kind of crapped itself a bit, right?
Yeah, I think a massive overreaction to the ISM yesterday, particularly on the manufacturing side. Like we've got services later this week, which will be much more important. I mean, bear in mind, manufacturing is 20% of the economy, so it's not such a huge deal.
Maybe illiquidity around the holiday period.
I think so. Yeah, I think there is that. Yeah, and you know, we had the PC numbers last week again tick lower. I think Powell's comments come out and said it was good to see. So he's definitely comfortable with that. So I think we've now priced June to be like 50-50 call on the rate cut. It was about 70% last week. But yeah, it just feels a bit overdone. And again, I think markets are going to continue to frustrate themselves by the Fed's dovishness, because I don't think the Fed at this point are completely looking at the economy and inflation. I think the bar is really high for inflation and the strength of the economy to stop them entering this cutting cycle, because I think there's much bigger considerations at play, namely the US deficit and how they're going to control that. And then also some of like the global strains and stresses that we sort of seeing percolate, and particularly with the second two largest economies next to the US in the world, in China and Japan.
Yeah, there's been some movement in both of those, right?
Yeah. So we're, I think, like something like 34-year lows in the yen. And they've really stepped up the rhetoric in terms of trying to defend their currency. But as we said last week, they're still running very, very easy policy, right? They're also as well, they're flirting with recession themselves. Yes, they've got some inflationary pressures, but in terms of the economy, they're flirting with recession. China, we're in this deflationary spiral. Data has looked a little bit better there of late, but they've still got this property crisis, this deflationary spiral. So they're needing to run easier policy. So every time we get this move in US yields and the dollar, it's just complicating things for them, because they want to keep this easy policy running, but they don't want to lose control of the currency. And ultimately, I always say, the currency will be the escape valve for everyone, including the US, which is part of the longer term bullish narrative for Bitcoin, because all this whole fiat system is kind of unsustainable.
What's this thing about China restarting QE or something like that?
Yeah, so that was interesting last week. So there was a story circulating in the Chinese press, and it was actually quoting President Xi from a talk he gave back in October, where essentially he instructed the PBOC, the Central Bank of China, to restart essentially Chinese treasury bond purchases to use that as part of their toolkit for
When was the
liquidity
last time
provision.
Did that? It was a long time ago.
Yeah, it's been like 2 decades or something like that.
Oh, wow.
So, and they've been reluctant to use it through fear of being seen to be doing QE and sort of stimulating and overstimulating the economy. Again, I think it speaks to the pressures that China's under right now, and the thing is, he said this in October, so it's been about 5 months, and they haven't bought any treasuries. But as we know, the Chinese press is very controlled. So the fact it's now circulating, for me, felt very much like a trial balloon of prepping the market for, we are going to start buying our bonds again, and which is effectively QE. Now, other we now get into the semantics of, this isn't QE, and a few of the big banks who I always sometimes think as well are a little bit in the pockets of China, but they'll be very quick to come out and say it's not QE, it's just another sort of monetary part of the monetary toolbox to maintain sufficient liquidity and all these things. But ultimately, it all amounts to the same thing, that they all need to artificially inflate assets. You're buying your bonds, you're artificially inflating the assets.
Yeah, exactly. Like the fact that you have to step in and buy them because no one else is there.
Yeah,
tells you that, right? It is an artificial market manipulation tactic. Basically.
Yeah, and people get lost in the kind of, I say, the semantics around like QE that was sort of made to, we are purchasing bonds to lower yields and all that stuff. And it was a bit similar last year around the when we had the regional banking crisis. And people go, oh, it's not QE, is it? It's not QE, but it's balance sheet expansion and it's liquidity injection, and it all amounts to the same thing. And ultimately, that's going to be good for Bitcoin. So, we still have these things percolating. That's the big picture macro narrative is just beautiful for Bitcoin right now. The problem is short term, like. Certainly, I've spoken before about China. Like, they again try and maintain this veil of stability, and I do believe that they're probably sitting on Bitcoin right now.
Do you mean say sitting on? You think they're selling it?
I do, yeah, or encouraging miners and whoever in China to sort of sell Bitcoin in the same way that you've seen, like even today, the state banks were selling dollars to try and keep a lid on dollar CNH. It's an instruction to say, we need you to sell these dollars. So I do think, and when you look historically, whenever the currency comes under pressure, it tends to coincide with Bitcoin having a bit of a dip. Now, you can do that for so long, but obviously, and because what they're trying to do is stop the capital outflows and to try and discourage capital flowing out of the country. Now, they have capital controls, so Bitcoin is obviously a way of getting capital out of the country. So if you see Bitcoin coming down, you're less incentivized to kind of rush into that. But you can only do that for so long before those capital outflow will be far larger than anything that they can do to stop it.
And that was counteracting the inflows that we saw in the ETFs because they recovered last week, right?
They recovered last week, although we did have a negative day again yesterday. So we've still not got this sort of consistent flow. So I think we're just in this. We're just sort of chopping the ranges. I still think we look like we're setting up to kind of rip higher. April's going to be really interesting. Obviously, we've got the halving coming up.
On that, the halving, I mean, it's not a one day event, right?
No.
It's a well telegraphed mechanical thing that we've known about and happens every 4 years. So should it really be that we rally around the halving?
Yeah.
Do you know what I mean? Like, why should the timing of the rally be around the halving, right? It doesn't really make a ton of sense, does it?
Yeah, no, it doesn't. And again, it's a narrative thing. But also we do know that, following every halving, we have seen a decent rally, but that like you say, that occurs over a period of time. And the day of the halving, again, it's like a stock versus flow type dynamic. The flow or of supply slows up, but it's not an immediate impact. But I think it'll be very much like the ETFs. Like you can kind of price the event in, like buy the rumor, sell the news. You'll probably sell the news, but then over time, the pure supply demand dynamic exerts itself, and then we'll sort of start.
Yeah. So between now and June, once the halving's all done and dusted, and the kind of consistent reduction of supply has been felt,
Yeah.
you would expect prices to be higher. But in terms of the path that takes, it could easily have a bit of a drawdown. I mean, funding rates are still 25% in the 3-month bucket, right?
Yeah.
Which suggests that there's a lot of specs in the trade, right?
Yeah.
And we know the CME open interest on futures is super high as well. So there's definitely risk in the near term of some need for liquidation for people who have only really bought it this quickly for the halving.
Yeah. I mean, you know me, Imran, like pretty perma ball on the Bitcoin stuff. I do think we're in for a tricky couple of weeks. To say, I think what's going on in China is difficult. We've also got, I think it's on the 15th of April is the US tax repayment date. So, people will be selling maybe some equities and some Bitcoin to basically raise the cash to go and pay their taxes. Right. So that might, I think, over the next couple of weeks, just weigh on things a little bit. And maybe that's what we're seeing today, partly. The other thing that's really interesting to me this month, and I'm not sure when the date is, but Yellen is going to China, right? And I think again, this is going to be sort of pretty huge. The last time the US went to China was back in October, November, I think, last year. And then we had the dovish pivot from Powell. And right now, Yellen's big concern, as I think is the Fed's, is how are we funding this deficit? That's kind of spiraling. And obviously China is a big holder of US treasuries, and they'll have a big part to play in that. And I think the message that she'll come back with, certainly when she speaks to Mr. Powell, will be, we need to get the dollar and rates lower. However we do it, that's what we need to do. And I think this is going to really annoy bears. Going, we've got this resilience in the US data. Inflation's still sticky. Why is Powell still being really dovish? Mm-hmm. So I think we're set for some fireworks around the macro. The other thing as well that I'm watching is, say we had this move in yields. I think 10-year yields around 4.32 or something at the moment as we speak. 440 seems to be quite a big level of resistance in 10-year US yields. We're kind of in that stage on the path of whereby higher yields, stronger dollar is actually negative Bitcoin. But I think if we start breaking above there, then it becomes fears around US debt sustainability. And then all of a sudden the Bitcoin flight to quality narrative that we saw last year flare up. Again, that actually becomes a positive tailwind all of a sudden for Bitcoin. So yeah, I just think we're at a really interesting point where the macro is percolating like really nice in the background. Positions just being washed out a bit. We're just treading water. We've got the halving coming, and yeah, it feels like we're building up to an explosion, probably in vol in my view, and that vol event will probably be to the upside.
Interesting. Well, speaking of vol, we're not doing my usual vol update this week. I actually got a chance to catch up with Greg Magadini from Amberdata. Those guys produce a whole host of vol analytics that all the vol traders I know out there in crypto use it religiously. So have a look at what Greg had to say.
Hey everyone, it's Imran from Options Insight, and I'm talking to my friend Greg Magadini here from Amberdata. You may remember him from our launch show when we first launched the podcast back in January. Greg, quite a few things have changed since then.
Yeah, absolutely. Imran, thanks for having me on again. Very happy to be on.
It's good to catch up. Good to catch up with you.
Rally.
Yeah, prices have doubled. I think since the ETF came out, I think prices have near enough doubled, right? So you were very bullish. I remember your exact words were 100K Bitcoin makes perfect sense to me. And we're halfway on the way there since we last spoke. So we'll see when that actually plays out, if we get that. But let's talk a little bit about what's going on in the vol market right now in crypto. I've been eyeballing it, and I've seen implied vols holding up very well in the last week, even though crypto itself has kind of calmed down, hasn't had such wild swings in the last week at least. So we've got various risk premium flying back up to over 20 vol points. Any particular reason why you think that is the case? Like why is this vol holding up so well, given that spot's kind of found a level now?
Yeah, the way that I'm kind of viewing this current situation is like fundamentals trading versus positional, and like how the market's already positioned. So there's a lot of good fundamentals to be long. One is, Bitcoin making new all-time highs. Do you really want to step in front of that train? There's like, or do you want to like buy some vol and expect it to kind of explode higher. Two is that the ETF flows have been, outperforming expectations by a lot. I think it's the most successful ETF launch ever. So that says something. And then three is the halving cycle. And if I look at the term structure, really the halving cycle is being priced in. I think the halving cycle event is, April 19th to April 20th, depending on your time zone. And if you look at the contract for April 26th, you see a nice like kink there for the implied vol. And everything before that is kind of just dipping lower. So I think the option market is really, like some of the other derivatives in the space, really positioned for like best case scenario. And I think that's what's going on here.
So people have piled into a load of April vol because they think the halving is some massive event that's going to trigger the break of all-time highs, and we charge to like 80, 90K, and they're holding call options for that trade, basically, you think?
That's my thinking around that. And if we look at the like spot ETF decision time, again, we had like this massive implied vol pump going into that event as well. So that's kind of what I'm thinking is happening here.
But is the halving, it's not like the ETF approval, it's like a binary event of you've either got the approval or you haven't. The halving we've known about, it happens every 4 years. It's not a one-day event. So does it need to trigger this massive amount of volatility? Personally, I don't think it does.
I don't think so either. I think this is like an artifact of the crypto market. Everything that's like you buy insurance for unknowable events. You don't buy insurance for, events that have been telegraphed since the white paper was launched, and you can price it, diminish supply pretty easily. So typically, I would agree with you. I think that this is a very
that's a massive vol selling. So that's a massive vol selling opportunity then, surely, right?
Yes, I think so. But I'm also right here. I'm like, I could see it get more crazy going in.
Yeah, but it gets crazy if the ETF inflows suddenly accelerate and go nuts again, then it can get crazy, right?
Yeah, or if we kind of break above the 71,000 high, I think, there's still kind of like this open air. There's an air gap above, where does one rally to? So I think there's a little bit of that as well.
But if you're long already, like the coins, I guess it's a great time to hedge it right now, right? Given that everyone knows the halving's coming, vol's elevated, and the futures basis, right? The futures basis is still crazy, like 25%. What's that all about?
Yeah, that to me is very interesting. So if I look at the futures open interest over, say, the past year, we have basically doubled the open interest in the futures market. CME continues to lead the way. And this is really translating nicely into a higher basis. And something that's really interesting is like we saw the basis expand going into the ETF approval and then pretty much collapse after that, which is kind of an interesting phenomenon. To me, the way that I'm thinking about this is that a high basis, overvalues calls, undervalues puts, just a little bit of that. High open interest in the futures market is really subject to kind of a liquidation cascade if we get any sort of pullback. And then lastly, if we do get a pullback of any sort, like the basis should collapse as well. So now you have like these three kind of factors that are coming right into the halving event. And maybe the halving event is a nice sell the news event. And in that case, we have like all three pricing phenomenons kind of occurring at the same time. Really interesting.
Yeah, I tend to hedge some percentage of my crypto holdings in my Deribit, right? And at the moment I'm running a pretty light hedge right now because I thought Bitcoin was probably going to continue to take out the highs. The optimism around the halving, the ETF inflows were going to reaccelerate into the end of the quarter and things like that. But yeah, I agree with you. Like, given the kink in the curve that they're attaching this kind of date to it, it feels like I should up my hedge ratio the closer we get to that date, because I don't see that being an event where we're suddenly going to see a big explosion higher, right? So I'm certainly going to be looking to increase the hedges, I think. Yeah. All right. So moving on from the sort of Bitcoin story, I've also noticed that Ethereum puts seem to be a bit more in vogue than Bitcoin. I guess people are thinking Bitcoin's just going to rally into the halving. Why should I buy puts there? Whereas the ETF approval date for Ethereum that people were touting as May seems to be not going to happen, really. And I think people have then piled into some Ethereum protection. And you can see a short-term bid to the skew in Ethereum. Whereas if you go longer term, it's still very much a call bid. And it's even more well bid in calls than Bitcoin is, right? And I've been going on about this for the last few weeks, this steepness of skew term structure in Ethereum. What's your take on that?
Yeah, that's really interesting. I think the first part or the front end of the curve makes a lot of sense to me. We've definitely soured a lot in terms of sentiment around the probability of getting an ETH ETF approval. So that definitely makes sense to me. If you look at the Bitcoin ETH ratio, or the ETH Bitcoin ratio, ETH is really kind of at the bottom of the recent range and is kind of testing and flirting with kind of breaking lower. So that definitely makes sense. And then for the longer term side of things, there's a big question there. Maybe the longer term rolls down into sort of the negative skew. That could be a thing. But I still believe the phenomenon that if we have a bull market, historically altcoins outperform Bitcoin. ETH is still an altcoin. ETH has a smaller market cap. And maybe the ETF narrative just gets kicked down the road, and they reapply for a spot ETF approval and then get it later down the road. So I think the phenomenons of altcoin, bull market, ETF getting kicked down the road supports the idea of higher skew in the medium to long term. Or higher.
Speaking of altcoins, you've seen that Solana's back on Deribit, right? You can trade Solana options. Obviously, you guys do all the vol analytics and provide all the data for traders like myself. What are your thoughts on Solana Vol? I mean, is it a bit early days because it hasn't been trading much and the maturities are only out to 1 month? Or got any thoughts around Solana Vol? Whether it's cheap, expensive, what you would do in it?
Yeah, actually, I haven't really been following Solana after sort of the FTX thing. I kind of just moved away from it, and I've definitely just kind of watched it from the sidelines, make massive gains. So that's to my own detriment. But it's definitely something that I plan to start looking at more into the future, but I haven't looked at it recently.
Okay. Yeah. I mean, I'm licking my lips ready to buy 6 to 12 month calls in this stuff when they decide to list them. But right now I'm kind of waiting because for me, 2-3 week options are a bit binary, right? I don't know if Solana's going to charge in that short space of time. I mean, I'm a believer that Solana can do very well longer term, but it's hard to really have that conviction on super short dated options. All right, Greg, I'm going to leave it there, man. It's always a pleasure catching up with you. And, hopefully the listeners enjoy hearing your thoughts and opinions as always. We'll catch you hopefully sometime soon in the future.
Thanks, Imran.
Okay, so that was Greg's thoughts.
Yeah.
What do you make of that this week?
Yeah, always good to hear from Greg, right? He's got a great, he has a great view on this space and always makes it seem so straightforward.
I love the way he explains himself and just, it's always very thoughtful and very measured, I was joking, saying he was talking about 100K Bitcoin last time he was in the studio with us, right? We're halfway there.
No, we are. And actually, I think that's a really good point, actually, because that was beginning of Jan, I think. And, I'm obviously a very big picture kind of macro guy. And we have all this excitement around, bears come out very quickly. It's, look what's happening. Bitcoin's getting trounced. And it's like, guys, this is such a minor correction in the scheme of things. It really is. But I thought what was really interesting listening to Greg there, and it kind of ties into what we've just discussed. Given that I think we're probably going to be in a bit of a choppy range for the next couple of weeks, implieds probably are too high. So I know you've always been to be selling the gamma, and in the past I've kind of cautioned against that. I probably feel that trades pretty well right now.
Certainly top side, a bit of call overwriting.
Yeah,
right?
Yeah.
Against the longs.
Yeah, and maybe as we speak, we're around 65.5K or something in Bitcoin. I'd be tempted to sell some put ladders or something as well, because also, a bit like when we had Manny on, and he kind of likes that trade. As we kind of come lower, you'd expect actually we're still in this positive spot vol correlation. So if we do continue to drift lower, then you're probably going to see vols come lower as well.
Yeah, I like that trade. I mean, I've got that trade. I've actually done it via put ratio. Right. So I'm long the 70K puts and short the 65 behind it. So the idea is you kind of make money down towards 60k. If it blasts through 60k, then you get in a bit of pain.
Yeah.
But if you get the grind lower, which we kind of seem to be doing,
Yeah.
then that actually works quite well if the vol resets lower. But right now, the vol's holding stubbornly because it seems people have just want to own April options because they're expecting some explosive move for the halving.
Yeah.
But unlike the ETF approval, it's not a one-day binary event. As I said to Greg, right? It's this long-term supply drain that's going to happen. So I think the market's mispricing it a little bit.
Yeah, and I think you probably do want to position short vol, like, you know, it's certainly in the front end into that. And I say, I think given all that's going on, at the same time, I do appreciate the fact that there's so many kind of risks all bubbling, you know, away. And like I just described, be it from like what's going on in China and Japan, you know, there are potential currency crises brewing there, particularly in Japan. You know, Yellen's visit to China, all these things.
Yeah, but you don't have to sell naked risk.
No, yeah.
You can do iron condors,
yeah.
whatever it is, and just be like, the front end's trading on a 70 handle.
Yeah.
We're realizing 50 again, right? There's an opportunity there. I think.
But like, I mean, you should, you know, you still want to hold sort of old further out, you know, further out.
100%.
So that should probably cover you if we do then get the move, and you know, trying to time it's really difficult. There's clearly massive resistance into that 71k level, 75. So I do think we're going to be in a choppy range for a couple of weeks.
Speaking of long dated vol, we saw flows wise, we saw someone buying the 200k strike calls to March next year.
Right, yeah.
So that, and there was a big clip of 100k calls to December as well.
Right.
So people are now starting to, because there's a bit of liquidity coming in those longer term maturities, people are looking much further out now, much longer term.
Yeah. Well, that's interesting, yeah. It wasn't me, by the way.
It wouldn't surprise me if it was, to be fair.
But yeah, like, I still, the longer term story is still very, very compelling.
Mm-hmm.
I do actually feel central banks are trapped right now as well. Like the Fed actually, you know, the more, like Powell is telling us that they're not hiking rates anymore. Right, that's one thing they're not doing. They might stay, you know, higher for longer and all that stuff.
Speaking of rates, right? So US rates are 5%.
Yeah.
So why isn't every man and his dog doing the funding trade where you own your Bitcoin, you sell 3-month futures against it, and you lock in 25% annualized yield, which if we cut that, if you divide that by 4, you get like 6%, you get over 6% in 3 months.
Yeah.
When in US rates, you're going to take a year to make 5-odd%, right? Yeah. So I don't understand why that trade is not getting arbed away by the funds in the space.
Yeah, I mean, it might speak to the fact that there is just, you know, a lot of spec demand still want to be long. I mean, you know, a lot of the market neutral funds in crypto are loving that, and they're having a great time to start the year.
But what I would do if I was at a fund, for those of you who are at a fund listening, this is what I would do if I was sitting in your seat. I would lock in that funding. I would own my Bitcoin, I would sell the futures, and then in case the market does explode to the upside, I would sell some puts and buy some calls, right? Or actually, I would sell some puts and buy some call spreads and take advantage of the higher vol, because that way, if we go down, the futures that you've sold, you effectively buy them back at your put strike, and you get delivered Bitcoin after a correction at a nice low entry point. And if it starts to run away on the upside, you've got the call spreads anyway to make some money, right? But if we sit here and do nothing, you've done that trade zero cost and you've earned your funding. Happy days, right?
Makes a lot of sense. That does make a lot of sense. And this feels to me actually, this is very much a trader's market, I feel right now. Like when we're in these nice little choppy ranges, you know, implied vol still a little bit bid, you know, funding still a bit elevated. Like these are the sorts of structures that we need to be thinking about for short-term traders.
And by the way, that's not financial advice.
No, never is.
Never is.
But like, yeah. So and I think a lot of that stuff will start going on. That will probably have its impact as well on sort of where price goes. So yeah, I think strap in for a couple of weeks and just sort of trade those ranges, and then we're still shaping up for, I still think, probably a very strong quarter again for Bitcoin. I mean, again, it's easy. I quite like when you get these sort of nice landmarks when we've just gone through a quarter, and it's like to see how far we've come. And Bitcoin again's pretty much outperformed everything unless you're a cocoa trader.
Yeah, that's right.
So it's we've come a long way. Nasdaq's had a really good start to the year, and again, if I kind of think really big picture, look, we're going into an easing cycle, so the path of least resistance for me is still that risk assets trade higher. We'll have these momentary pullbacks, times when liquidity gets withdrawn a little bit, and that creates some chop. But generally the path's there, so you kind of trade with the path. A little bit of patience maybe throughout April with some of the event risk, tax, the tax payment date in the US, all those things would maybe just keep us a little bit frustrated for those like me who are bullish and wanting higher levels. But we've been spoilt for about 3 months with pretty much non-stop higher.
Exactly. Yeah, exactly. That's the key takeaway, right? The fundamental picture hasn't really changed, but if you're lucky enough to get a dip, that's why it makes sense to have a few hedges in place, and then you can re-engage and lever up for a move later in the year, right? So I think that's it for this week. Thanks for watching, and we'll catch you all next week.